that sounds very scammy. And then that brings into question the entire use case of Bitcoin in the first place. There's been a narrative that got built around Bitcoin as a store of value, and this has been something that's been going around for quite some time, but that was never the original intent of Bitcoin. Bitcoin was meant to be utilized. And we are starting to see miners lose their influence over price, and that brings into question what is the intrinsic value of Bitcoin if there is no energy for the production of Bitcoin. A new type of buyer who never sells is scooping up Bitcoin from longtime holders, a bullish catalyst for Bitcoin, says Bitcoin OG Udi Wertheimer in an exclusive Cointelegraph interview. In an exclusive interview with Cointelegraph, the commentator lays out a provocative thesis. Over the last 5 years, institutions have been quietly buying out old Bitcoin holders, and it's reshaping the market in a way few have appreciated. For the last 5 years, they've been buying out old Bitcoin holders, Udi explains, both kind of Bitcoin maxis, but also people who always had some portion of Bitcoin and have been selling it over time to get into Ethereum or Solana or whatever other altcoin. To add a little exposition there. Those new buyers aren't flippers, they're forced buyers. Udi points to Michael Saylor's strategy as the prime example. If Saylor stops buying Bitcoin for a sustained period of time, his company loses all of its value. He has to keep coming up with more new original ways to raise capital to buy Bitcoin. This, Udi says, is unprecedented. Bitcoin in the past had many instances of forced sellers. This is the first time that we have a forced buyer, structurally forced buyer who has to buy no matter what. The result, he argues, is that we are at the very tail end of old holders rotating out and heading towards a supply crunch that could ignite explosive moves. Wall Street bought all of our Bitcoin we didn't notice. Udi even floats a price target that sounds insane now, but might soon feel tame. I think 400K is conservative. From Ether's new treasury companies to the fragility of leveraged players, this exclusive Cointelegraph interview is packed with insights, and you guys can go watch the full conversation visiting the link down below. The question is, and I think the idea is correct, right? We haven't seen anything like this in full force quite yet. And by this, I mean effectively institutions getting involved in Bitcoin, purchasing up all the Bitcoin, and then holding it out of necessity to basically prop up the price of Bitcoin to maintain the value of their company. Now, to me, that sounds very scammy. And then that brings into question the entire use case of Bitcoin in the first place. There's been a narrative that got built around Bitcoin as a store of value, and this has been something that's been going around for quite some time, but that was never the original intent of Bitcoin. Bitcoin was meant to be utilized. And we are starting to see miners lose their influence over price, and that brings into question what is the intrinsic value of Bitcoin if there is no energy for the production of Bitcoin. In the past, people would say effectively that the cost of energy for the fees is what you would derive the value of Bitcoin from, and the intrinsic value comes from the actual energy cost to produce the Bitcoin and to effectively transact with the Bitcoin. But if you shift the narrative to a store of value for Bitcoin and you take away the necessity to transact on the blockchain, the intrinsic value therefore decreases. And so we're left with a question of, if it's just a store of value and you are forced to purchase it to basically manipulate the price to go up, then is it anything more than a Ponzi scheme? That's a question I'll let you guys answer in the comment section in the live chat, but I think it's worth bringing up. As far as a $400,000 price point for Bitcoin by the end of the year, I think that would be pretty far-fetched, seeing that miners no longer have as much influence over the price as they normally have, and that the institutional buying is being done over the counter and not necessarily on the chain itself, and it's basically paper trading. You have no forced buying from your traditional centralized exchanges, and you don't really have any viable DeFi for Bitcoin at this point, at least in my humble opinion. So you have nothing impacting the actual supply of Bitcoin itself, because it's just trading hands between people that already have a lot of Bitcoin. And that means that it's just a good old boy club. And then we have to once again bring into question whether the entire premise of Bitcoin replacing fiat was ever or will ever come into fruition. And I'm not necessarily sure that it will. That doesn't mean that it doesn't serve a purpose. And we can talk about the Trojan horse narratives that I've spoken about previously. One being originally was the Trojan horses. You get a bunch of people to invest in a limited supply currency, and the people that are already invested, their ships rise with that tide, and you effectively decrease the income inequality gap because you aren't able to manipulate it like you were able to manipulate fiat. And so you get people buying in, thereby increasing the net worth of individuals that were already purchasing, and you can't manipulate it back down by filtering it into other assets. Unfortunately, Bitcoin has just turned into another asset. So I present the second potential of the Trojan horse theory here that I have been working on myself, and I think is kind of interesting, in that the Trojan horse is not to replace the fiat system, but to build a system that loses its intrinsic value over time and leaves the rich, greedy people with the bag. By that, I would mean you would have a meteoric rise for the price of Bitcoin as the supply decreases. And then once all of the supply is eaten up and nobody's utilizing it to purchase anything, and there is effectively no intrinsic value from the energy cost to produce or maintain the network, then nobody has a reason to participate within the network anymore. And you thereby once again decrease the income inequality gap by removing a bunch of the asset wealth from effectively these big, large corporations like Strategy, etc. And that's a really interesting one. It's not a very positive one for crypto, but either way, you almost solve the same problem and you kind of move forward, right? And then other projects can come into place. Blockchain in general isn't cryptocurrency. Blockchain isn't just going to be Bitcoin either. There are other use cases. And if we're talking about the technology, that's separate, right? So I would still say, regardless of which Trojan horse narrative we end up going down, we will always have a piece of blockchain within our society, I think, from here on out for tracking and all of this sort of stuff. It's just an interesting thought that I have. I think, but if we want to really talk about 400,000, like I said, I think based off previous cycles, the highest it can go is 200. I could be completely wrong on that. We are seeing a complete shift in the way Bitcoin is both mined and utilized. And I think because of that, we are in a position of unknown. I think we maybe have 1 or 2 more 4-year halving cycles before miners have completely no influence over the price. And I think a futuristic indicator of this, or a foretelling of what will happen to Bitcoin in the future, we'll be able to luckily see with accelerated blockchains like kaspa, for example. And as that runs out of its block reward, we'll have to see how the market reacts to it. And then that will give us a pretty good indicator, I think, of how Bitcoin will react as we run out of that block reward. Now, the good news for Bitcoin and why I think we will be going higher, like I said, in October, probably through February, sometime around there, it's still following that halving cycle. So as much as we say this halving cycle is different, it is different in many ways. And that's because of institutional buying, the lessening effect of Bitcoin miners on the price, and all of that. Even with all of that said, as far as a macro level halving cycle, we're still seeing, similar behavior from Bitcoin. We're coming up on October. We're coming up on that time where we start to see in the past those euphoric phases. And if you can see here, Bitcoin's 200-day moving average has officially broken 100K. This is really, really big. It means that the average price of Bitcoin for the past 200 days has been over 100,000 US dollars, which says that we've probably created a new bottom here, which means it's kind of like that whole traders will be like only up and that sort of stuff from here. And that is definitely a very strong potential, albeit, be cautious. It's not trading advice or anything like that. It's just analysis of what's been going on with the market. And because we're at this point, because we're coming up on October, because the institutional buyers and retail buyers are going to be seeing this performance from Bitcoin, it might influence a large influx of capital into Bitcoin over the next 6 months, right? And that's kind of what I'm looking at as far as like, okay, good. We are on that path. What's the top? Nobody will ever know. I think it's still better to base it still, if you're looking at halving cycles, to base it off of time over price. And that's because, there's too many factors for an exact price, especially now that miners have such a low level of influence over the price of Bitcoin. I think it would be very bad for you to say, well, because Bitcoin went up X and X over the past halving cycles, I'm going to sell at 210,000, right? Like, that's not going to be a way to play this game. It's going to be, from the halving cycle perspective, you always sell on like your timeline. The hard part is, and I think people are aware of the timeline now, and this is something to talk about as a whole, is that the thing that's impacting this cycle the most is the ubiquitous knowledge of that the industry has of the behavior of Bitcoin over the halving cycle, meaning everybody's aware of the halving cycle and the timing of it. Before now, we've typically already seen prices go higher, right, to that $200,000 mark that would have been predicted, for this cycle, and one that I was holding on to as well. Because everybody's aware of it, it's impossible for it to really take place. And the real winners are selling, like I said, based off of time, and they're looking at this and kind of judging, relatively where their profit margins are. Now, the question will be, how much of an influence does MicroStrategies need, for example, to purchase and keep the value of their company up? And I should start calling them strategy. Yes, I get that. But how much of that will influence the price to go even higher? And how much will that eat up long-term holders and all of that, right? Or will the long-term holders still continue to hold? I think like the people that are aware of the halving cycle have been holding on to the Bitcoin for October through February of this year, right? Through February of 2026. And they might start selling off enough to counteract the institutional influence over the price, because they'll be based off of time, and that is something that could be being done. Now, on the kind of current year and running up to this point, I think the traders have been trading against the halving knowledge, right? So the traders are using the anticipation of the holders on the price going up to effectively make money off of the trades. And that's why you see the price suppression, because they can basically predict the behavior of the individuals that are aware of the halving. And that's kind of like a top-down perspective on like what's happening with the price of Bitcoin, why it's not behaving necessarily exactly the same as it had previous cycles, but still on that general pattern, right? And I think it's really interesting to see a Bitcoin kind of come into fruition. It's unfortunate that it's coming into fruition as a store of value as opposed to a currency, in my humble opinion. It's not the direction I would ultimately like to see blockchain as a whole go in, because maybe I bought into that narrative of replacing fiat too heavily. And as we know in the past, anybody that tries to replace fiat, well, they mysteriously disappear. So what can you do? Well, you can change the narrative to a store of value, the powers that be, right? And treat it as such, and then expect that the influence that you have over everybody else will be to treat it as such. I think that's why you see articles from BlackRock. I think that's why you see, the Trump family investing in it as they are. It's, if we do this, the public will follow treating it like that, and the public would have to treat it differently. But it becomes difficult when it gets thwarted by the fact that you have a group of people that will never sell it, right? So and buy large chunks of it. And this happens with every asset, right? Like it happens with milk, it happens with eggs, it happens with toilet paper, right? And I think it's proven to not be, at least up to this point, Bitcoin seems to have proven not to be a replacement for fiat. But that may be the general narrative that's getting pushed, and that's why I have that perspective. There we go. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.